Good morning, and thank you for joining us on Morning Markets from True Potential. Today, just a brief recap on equity market performance from yesterday, and then we'll look at some of the economic data points that we've seen over the past 24 hours. Equity markets yesterday, a bit of a contrasting performance between what we saw in Europe and then what we saw in the US. In Europe, a better day of performance, really driven by what was going on in the German equity market, where we saw good and strong performances from a number of the car companies there, so VW, BMW, Daimler, etc., and also a bit of a rebound in the financial sector following the movements that we saw on Monday. And contrast that with the US. The US market was probably little changed over the day, although when the US did open yesterday, it was lower. A large part of that was driven by the theme that we've been discussing over the past number of weeks, the movement in the sovereign bond yield. Sovereign bond yields yesterday moved out to about 1.77% in the US, and that had a clear impact on equity market performance there. Albeit over the course of the day, that sovereign yield did come in again, and we saw the equity markets moving off those sort of lows to close at that relatively unchanged level. I think it just further illustrates that the equity market is very much tied to what we've been seeing in the sovereign bond market. What might break that link? Well, we've got first quarter results coming in a number of weeks' time. That might give a better indications to what's happening in the economy, how companies are performing, and it may detach that link a little bit. But that remains to be seen, something that we will clearly be discussing as we get those results over the coming weeks, I should say. And just on the economic front, yesterday, just wanted to touch on consumer confidence in the US with the Conference Board data coming through, and that was very positive. We saw a step change in consumer confidence moving from 93 to 101. A large part of that speaks to improving sentiment in terms of the current conditions, but also the future conditions that consumers are expecting. Within that, very much about employment prospects improving both in the short and the medium term as the economy recovers. So that giving consumers confidence in the outlook. So that's a very encouraging sign to see. We also did see a similar thing in Europe where consumer sentiment improved. I think the only note of caution there is that a large part of that survey would have been conducted before we saw the restrictive measures increased again in Europe. So what helps us think about that there is a degree of pent-up demand. It will come through, but what we're probably seeing is that being pushed out a little bit in the case of Europe. I think then turning to Asia and overnight, quite a few interesting data points there to discuss. The first one around China, where they're always first to get out with the purchasing managers indices. We saw that for March coming through. Key thing there, the services sector expanded at a much faster rate than had been expecting, with a number of 56.3 versus 51.4. Remember, any number above 50 is an expansion in the outlook or an improvement in the outlook. I think we've discussed in the past that services has been a bit of a slow burn in terms of the improvement that we're seeing there. But really it does show a bit of a change in the dynamics there, and a number of the subcomponents improving, particularly one that related to construction activity. And that maybe feeds into some of the comments we've heard from the Chinese government around infrastructure spending, etc., and that working its way through the system. I think also worth noting that we did see a bit of an improvement in the manufacturing PMI as well from China. And within that, just looking at it, a large bit of that was driven by export orders. So illustrative of improvement in domestic mainland China, but also that global environment continuing to improve, which is supporting that export orders in China. So that encouraging data point there. And in the same way, we also had an improvement in industrial production from South Korea, an economy that's very much tied into global trade as well. So just that indications that ongoing improvement is evident, albeit we know there are challenges in the supply chain, but overall demand environment continuing to improve. I think just looking ahead to today and what can we expect, we've got nationwide house prices from the UK first thing this morning. That shows growth of 5.7% year on year, very marginal slowdown on a month-on-month basis. I think the other two things just to mention, one, in Europe, we'll get an inflation data points for March, and that will be a useful guide to getting thinking about how the ECB are viewing inflation, but also what's actually happening on the ground. And then this evening, we'll have the US infrastructure package being detailed. Key thing there is probably not about the size of it, but really how it's going to be funded and whether there was any mention of tax increases as well. I'll leave it there. Please do subscribe on our YouTube channel. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.